All right, ladies and gentlemen, I am live. Thank you for joining me today. We had a big down day in the stock market yesterday, kind of one of those bellwether days in a while. What up, Go? Radney. I kind of like Radney. I kind of like Radney. Not too bad. $100 billion buyback stock in Apple. Wow. That's interesting. What's up, Christina? Oh, this is interesting. Something I didn't know. Man, so I'm a little curious who thinks, since I don't know about this backed exchange, that I'm a complete and utter moron because that's the feedback I'm getting from a bunch of douchebags in my comments from my stream last night. Man, that was brutal. That was worse than my BitConnect video because it was live. So the interesting article on IBD saying that a lot of the buybacks in the stock market will continue and that they can't buy during the last 2 weeks of a quarter. That's something I did not realize. You pull this article up here while I wait for some people to join in. What's up, Blah? Then we're going to get to talking about the NASDAQ and do some research, which we're going to do live here, guys, to see about in the past what has happened during some of these pullbacks. There you go. The unofficial blackout period for corporation insiders generally goes from the last 2 weeks of a quarter until after earnings are announced. So that's something interesting. I didn't know that. So they're saying that the buybacks are going to come back on in a couple of weeks here for many stocks. So that's fairly interesting. But what we're going to look at, what we're really going to talk about today that we didn't have yesterday. Number one is look at all the red on Amazon. That's a huge red day on Amazon and a big full sell FU candle. But really what I wanted to look at is on the NASDAQ. I have a position for the TQQQ. Everyone hopefully should know what that is by now. That is a triple NASDAQ ETF. So while this whole market rally from the top has been down 9.37%, the TQQQ is down 24%. Okay, so not quite triple. Should be about 27% if it were to be triple, but close enough, right? So I've got my whole market thesis for TQQQ going back some time has been that, and we're going to go back to the NASDAQ here for this, has been that if the market arbitrarily drops a certain amount, and there was no level necessarily set, was that you just arbitrarily buy it because you don't need to necessarily hit that absolute bottom point in that bottom day, and no one's going to do that. But you basically buy that bottom print or the bottom area, and then you wait for it to go back up. And I think right now, maybe in the start of that process, I don't know about necessarily today. I mean, it could. Anything can happen at any time in the stock market. But when you look at these prior pullbacks, I want to look at the very high volume days. And again, I haven't done this ahead of time, so I don't know what the results are going to be. And I want to see if we should buy these high volume days or a little bit after these high volume days. So keep in mind, this is the futures, the NQ, E-mini NASDAQ 100 Futures Index. So these trade basically 24 hours a day except for 15 minutes. I think they're closed on weekends. And then they open Sunday at 1. So they're closed like 6.5 days or 5.5 days of the week essentially. Or open 5.5 days of the week. So let's look at this high volume print here. This was fairly early, 2 days into this sell-off, and this was back in February. And we actually bottomed 1, 2, 3, 4 days. So whether you consider we're here, just opening slightly green or not, this is a pretty good area to be buying in if you're looking at a TQQQ position. Okay, let's look at the highest volume day here. That was right there. Definitely a major high volume day. What's up, Eli? So I was just explaining what we were doing here in terms of the TQQQ and buying that on a pullback in a range, down somewhere. And I was seeing where the high volume day was, which was this day in this particular situation. And if you bought, like saying we were here right now, let's say we had our big high volume day, which we did yesterday. If that was the high volume day, if you bought here, you would have enjoyed a run here of 10%, which would be about 30% for the TQQQ, with a trough of about 5%, which would be about 15% for the TQQQ. Now, if you're doing this for longer term hold portion of your portfolio, which I am, that's not a horrible strategy. Now, it did have some extra downside movement, but trying to time that is interesting. So let's look at this one. So here, this is the highest volume candle. And again, if you view this as where we are, buying in, anywhere in this area, not a bad thing. Now that's only 2 pullbacks. Let's go back a little further. First, I want to show you where we are again here today, just for some, current whatever. So here's the high volume day was yesterday. The day we're down 5%. Okay. Now what we're looking for here is a follow-through day. We'll talk about follow-through days, and we'll look back a little bit over here to see where we went into a market in correction during this breakdown. I want to do that as well. So here, maybe we're looking at a buy somewhere in this range, right? Now this would be, remember our red line here, guys. This line is the same pullback that we've had these previous 2 bars, or these previous 2 periods. You see this pullback right there. This pullback right there, almost exactly. Yeah, that's fine, Eli. I really don't care. The whole point is the slide done here, or is it done at a correction at 15%, or are we going to go into a bear market? That's really the main question here. And regardless of what the answer is, the question is, this is essentially, if you take this to the bear market range here. Right now you're at about 45% into that range. There's about 50% into that range. So where do you start your accumulation? And do you think this is a more aggressive sell-off than we've seen in the past? All right, so we're looking at something like this. If this is that high volume down day, we're looking at something like this. Now let's go back. Let's see if we can duplicate this line, duplicate drawing, and we're actually going to go back, and we're going to get more data. Honestly, I don't really even care about the open. I think this is probably a little more important than the open. So here's the previous pullback that we had. This may actually be counted as a real correction. So let's look at this one. Where's the high volume day? The high volume day here was on this day. And the volume signature here is very abrupt, very in your face. What you have is 2 major big red down days. This is what we have. Well, we're looking for not necessarily confirmation, but we're looking for market behavior patterns. Hold on a second. Excuse me. So we're looking for market behavior patterns. Here's the beginning of that last of the 2015 quasi quote unquote bear market that we had. This one went down 15.64%. That would qualify as a correction. Technically, that would qualify as a correction. So those say that we've been in the longest bear market in history are actually false. There's a correction right there. I just showed it to you on the charts. Now, if you look at the highest volume candle, it's sitting there at about 718,000 shares traded. And I'm going to need a pen for this. And since I woke up, I don't have one. Because I just woke up. Ear pain, that's always a good sign before you go camping. FYI, guys, I will not be here tomorrow because I am going camping. So we're looking at 718,000 for the high print on that. I'm going to take a note of that. All right, and then after there, pretty much if you could get it near the close of that high, or that if you can get near the close of that day, you've hit that bottom right there. All right, of that slide. Now let's post. I can't. Okay, there we go. No, shoot. I can't paste it. That sucks. Okay, so let's give ourselves a 12%. I think it was like 12 and change. Okay, so let's say that's our slide. This didn't go down that much further, so we're essentially right, the way the opening's looking, we're right about here at the current moment in time. So if you're looking for a TQQQ position, this still is not a bad area to buy in. And again, what we're discussing here, for those of you just joining us, is potentially building, or at least for me, because this is not financial advice, and you should consult a financial advisor who knows a lot more than I do. Anyway, so let's do this again. So there's a 12% slide for the second sell-off. Now this one overtook the previous high and undercut the previous low. So where's the low volume print here, or the high volume print here? It's right here. That's the high volume print, and that was a pretty bullish reversal candle on that high volume print, which we did not have yesterday. So we're looking at something like this. I think on this sell-off we have some consolidation with bottoming action here, consolidation with bottoming, and then here we have a full-bodied candle with a high volume print, and this high volume print was 628,000. Let's write that down. All right, so those are the previous four sell-offs in the market. Okay, and even on this one, your high volume candle, you still would be pretty decent buying towards the low. That again, one of the questions we're answering is, where should we potentially accumulate a TQQQ position and forget about it? And guys, if you're here, just stay here. Okay, so there's 15 people here. Just each of you should stay here unless you literally have to go because of work or something. This is analysis here, guys. This isn't, if you're bored, I don't know what's wrong with you. But anyway, we're talking about an area of buying TQQQ. We're not talking about the actual low print. We're never going to know what that is, ever. And the whole point of this is that if you want to get in something like TQQQ, there's a nice rise. 13% should be 26%. This print right here, obviously you would go lower, but you only go lower 8%. The whole point is that, are we going into a minor correction similar to this before we go higher? In which case, buying anywhere down here, are you guys mad at that for a longer term stock market hold? And keep in mind, the TQQQ, ladies and gentlemen, is an index. This is not an individual stock. This is not going to zero. In no way, shape, or form is this going to go to zero. Okay? So my strategy with my TQQQ, I'm explaining that right now, Eli. This is not a stock. This isn't Bitcoin. This isn't a singular asset. This is an index. This is a basket of hundreds of assets accumulated together. And throughout history, the market only goes down a certain percentage before it comes back. Only twice in the Nasdaq's history has it gone down 50%. Only twice. And that's during the 2008 and the 1999 bubble. And we're not in bubble territory here. We're just not in bubble territory. Hold on. Need another drink of water. Man. So, again, this is not with every stock in the market. I'm not saying buy Eli Lilly because you bought this. I'm not saying buy Boeing because TQQQ or the Nasdaq has a high volume down day. I'm not saying that. I'm saying if you're investing for longer term, remember we talked about those baskets of investors, guys. Right now, I'm talking as a different type of investor than you know me as. This is not typical real crypto, Randy type of action moves. This is something completely different. This is something completely different. You guys coming from crypto, some of you are new to stocks, some of you have been trading a little bit, but it's one of those situations where you're trading an index. So this is 581,000 shares. Let's put that one down. Yesterday's print was 581. And high volume, like I say a lot of time, causes breakups, breakdowns. I don't know, 724. Right, there's that high volume print. This one, 805. What? Doesn't seem right. 927. And what was yesterday? 914. Yesterday was 914. So we're up there, guys, with some of... Yes. Few transactions a year, absolutely. That's exactly what this is. What I'm saying is this is a potential way to buy an asset, which is an index, guys. Okay? This isn't one stock. We're looking at buying a triple ETF. A triple ETF. You get 3 times whatever the index does. This is the back testing I've done. Let's say after this down day right here, let's say you bought the open of the next day, which happens in 1.5 minutes. That's up 20%. That'd be a 60% move in the TQQQ. 60% for what in my mind is a fairly conservative position if you market time. And well, not necessarily fairly conservative, but a dedicated buy at a certain technical point. Not necessarily based off of a breakout. Now, your breakout is up here. Last time this happened, I bought here on this breakout. This would have been a much better situation after this open. Now, we've already seen one situation, depending on the severity of the market break, right here where that high volume print, you can go down a considerable amount. You can still go down. Oh, come on. Oh, this one still went down about 5%. And there's no major high volume signal. Now, you could have bought here on this is a fairly compromised area for me. That's not a word, by the way. Okay, so market's going to open. I'm probably not going to catch the open here in terms of looking at stuff. I think this is important. Eli, so I've checked the previous volume candles and seems that they didn't time bottom. They were follow-up after. Oh, yeah, and see, that's what I started out addressing is seeing how these high volume candles have performed. These typically should be bottoms. The high volume prints should be bottoms. And even though this high volume print right here isn't the bottom, how much lower action do you have beneath this candle? 4 days? That's it. Only 4 days. What's up, Sratra? All right, 15%. CRISPR, GLOG, PayPal, TZA up 2%. So, okay, let's keep going with this exercise. I think this is valuable. And again, same way with this one. This high volume candle, put your bottom in for a number of days right there, right? Not too much beneath that high volume print, but quite a bit above it. Same here. Here's the low. The close is way up here. Let's keep going. High volume candle. Where are you? Right there. Perfectly fine buying the following day. 831,000 print for that one. This one, right there, high volume candle. Again, no major. So if we're talking for a longer term trade for something that you're in for a very long time, that low volume print is important. All right, so here we have another one where we actually touch this trend line. Where's the high volume print? Right there. 731,000. Barely traded beneath it. You know what? You can, here's another one. High volume print. 430,000. Notice the volume's getting more expensive as we go higher because the Fed's put in liquidity. Sometimes these aren't always the ultimate lows, but they do end up putting in a decent place to potentially buy the NASDAQ. And we're talking, ladies and gentlemen, not about buying some willy-nilly stock that has earnings and faulty CEOs and Tesla with a guy that tweets all the time and GE, which is a conglomerate that can't get its act together. This is the NASDAQ. You want to buy the stock market and get 3 times its performance, you buy this. So let's look at this correction, which was a pretty healthy one from 2000. Look at that. This buy was all the way up here. Still, if you would have bought this area, you never significantly undercut that high volume print. Let's keep going. Let's look. That's all I got going back 10 years, guys. This goes back to the crash. Let's go back further. I'm not trying to sell you on something, guys. I'm doing this for me, to be honest with you. Okay, so there's the crash. Where's our low volume print here? High volume print, excuse me. Well, there's a few of them. There's this one, which reverses immediately. There's this one, which is the first day. So there's that day, which was a support day, which we went off to the races. There's this high volume day, which was the first day of the crash, so that broke the market. There's this green day, which was a big support day, which undercut for a little bit, but not significantly before bouncing higher and then rolling back over. And you would have been able to time that, absolutely. Did I say hold forever? I didn't. You guys are reading too much into this. I don't think people quite understand what I'm saying here. That high volume print, there's a failure. Up and right back down, that would be a failure. High volume candle, failure to roll over. That shows you how weak the market was. We haven't seen a failure since 2008 with this particular type of a thing right there. High volume candle. Right there, that's your next high volume candle. And look at the range down. It gets very range bound. No major high volume down here. But again, this is an extreme situation, guys. The market just dropped 50% in this area. But still that high volume print after that one. So a couple of false prints. But since then, no false prints on these lows. High volume candle. That's a bottom. More than likely, that was a bottom yesterday. More than likely. Look at the volume today. Already almost up to average volume just on the overnight session. So I'm buying this. We may go lower. We may touch this. We may go a little bit lower, but based on this, I think I'm buying this situation. Now again, we're talking TQQQ. We're talking something that can go lower and may still go lower. It may still roll over here. It may still roll over here. This is a position, guys. Don't do this because I told you to. You need to know what you're doing here. I'm dead serious about this. Okay. The reason I'm doing this and the reason I'm here and telling you guys about this and not holding this to my vest and not talking normal bullshit is because this is a strategy that no one talks about. Well, your buy window left for something like this, I think, is as low as you can. Okay. Now, again, we may rock lower. We've talked about this trend line. We may go down here. We've seen situations where this reverses right back up. Okay. So I took half of basically what I did right now. Just to be honest with you guys, I took half of my account. I didn't do the whole thing, but I took half of it. Make sure that went through. Okay, it went through. And I bought the TQQQ. Now, can it roll over here? Absolutely. But, again, we can roll over down lower here. The whole point isn't to get the exact bottom in this type of a situation. The whole point is to be comfortable buying a low print, which historically, as we just seen, other than a major bear market calamity, these low prints have been some very good bellwethers that were almost done going lower, if not done going lower. And again, I'm not buying a singular stock. I'm buying something that is a representation of 3 times the NASDAQ. You're getting 3 times the performance of the NASDAQ. Eli Lilly down 2% today. Wow. Let's look at some ones that are moving here. Let's get back to a little bit of normal stuff. Restoration Hardware, CRISPR, GRFS, all these kind of making low prints. Save, ARMN. Looking really good after that sell-off, guys. ARMN, very nice. Well, it's covered in this. It's covered to this level. I would It's up to you, Eli. But Eli Lilly hasn't had too many red days ever in recent history here. I would consider, I'd consider maybe covering some of that short. We're going to fill this gap in here, and we'll see what happens after that. But good job, Eli. Good job, Eli. So BCC, but yeah, AMR and holding up really nicely since I remember that high tight flag buy point. We're right there, and we still never came back and touched that. So that's pretty good right there. We'll breeze through these and get back to that TQQQ and the NASDAQ situation. And it doesn't mean that we're necessarily done going down, but historically that's been a good print. So I want to go back to before the bear market and do that analysis there. Good short TZA if you want to. So some prints here, but Lilly down 2% I think is telling. Eli, you're awesome, buddy. All right, so I don't see a whole lot here really to start harping on. So let's keep going on this. So again, the situation we're talking about, excuse me, is the index known as the NASDAQ has an ETF called TQQQ, and the job of this is to give you three times the performance of the NASDAQ. That's its goal. It doesn't always meet that goal. In fact, today it's vastly underperforming. Oh wow, look how different the Qs and the futures look. The futures are 0 and the Qs are down 0.3. That's pretty interesting. And the TQQ down 1.63%. So that's interesting right there. But anyway, looking at looking at those futures, what we're talking about is, buying a potential low area, which has historically been low, on a buy signal or a bottoming. Not necessarily, it's not a buy signal. It's a bottoming signal. This is something you're probably not going to hear me talk about ever. Well, I don't know about ever again. I'm talking about it today. I may talk about it again in the future. But looking at a high volume print, which yesterday was definitely a high volume print, and potentially buying a low area, not a low print, but a low area for a longer term hold strategy for a leveraged ETF on the entire NASDAQ. And that's what we're talking about here. So let's take this and let's go back further. Let's go back past. Here we go. So this goes back to 1999, and we have volume only starting from here. So let's look for some of those high volume candles we've been talking about here on pullbacks. So let's go back into the bull market. I'm not really interested in the bear market section because we're not really here. We're not here in this part of the market cycle. If we prove to be there later on, that's a different story. But the economy's strong. There's really no reason for us to think we're anything other than where we are, which is at the top of a bull market that may continue. So here's a bull market. Here's a top of a bull market. Maybe we're in a situation like this. Let's look for those high volume prints. So there's a high volume print right there. Right. Okay, that little red candle, maybe a little difficult to see, but that little red candle, high volume print, didn't go much lower. Now it did rally out of that before rolling over. We could do that absolutely. We could go higher and rally out of this high volume print, unless for some reason we get bigger high volume prints. We'll have to see. This area, high volume print right there. Okay, not extraordinarily high volume. Yeah, 54.86 right now. Yeah. Now again, not saying that was the print. Not saying you have to buy the exact low off that, but anywhere underneath there is usually pretty good. Okay, so right there. So that's the low volume print, and it does go lower. but without, again, this isn't major market timing, guys. This isn't like super precise stuff. What we're talking about is taking the whole market cycle into account, looking for what is potentially a bottoming signal, which is a major volume candle. Keep in mind, institutions run the stock market, ladies and gentlemen. They make these high volume prints. No one else does. You and I and all of our friends we can't coordinate and make a super high volume print. It just doesn't happen. Institutions put in these candles here, and these levels typically end up being supported. So there's a high volume print. We have obviously some closes below it here. Maybe this may look like something we have today where we go lower, chop around for a bit, go lower, then come back higher. Okay, notice I didn't go all in that position. I went half in, right? Because who knows what's going to happen in the future. So I can always cover and take a loss, and it is what it is. Or I can be patient and wait for that pop up, because this low. If you notice, most of these low volume prints we've covered, guys, the prints there, and then a couple of weeks later we're higher, and that's what we're looking at. We're not looking at the exact timing. I mean, you can also buy right here, right? You can buy over a high, and I'm not going to. That's what I preach. I'm not going to fault you for that. This is a different strategy than what I usually talk about. All right, different strokes for different folks. Some folks this is really going to resonate with, and I wish there was more than 16 people here. 15 now. Someone left. Screw you. But yeah, this is my typical strategy. It preaches buy on a breakout of a previous high. That's my typical strategy, in which case you can probably buy down here too, because that's a break of that previous high. But what I'm saying is these high volume prints, pay attention to them. High volume print, that little one, don't get much lower, go higher. Look for the next high volume print in a downtrend. Here's a downtrend. Let's look for this. So how far does this go down? This goes down 15%. This meets that correction criteria. Currently, we're down what? I think it's like 11 or 12%, something like that. So we're down already towards this range in terms of percentages. And where's the high volume print? That doji bottom candle. That's a buy right there no matter what, essentially. So there's your high volume print at the 15 level. There's another high volume print, but we've already undercut a lot of price levels, so I don't really akin that as being the same. Although it could be, and even so, look at that. You only undercut for a while before you go back up higher. So even if you consider that your high volume print or that your high volume print, it's still a decent area to get in. All right, let's keep going. All right, so we got minor pullback here. This one only went down 6%, and there's your high volume candle. Only a few days beneath that, then back off to the races. That's obviously, there's a green candle. There's a high volume bottoming candle. And look at that, chopping around the area before increasing above that area. Even though we did fail, guys, we may fail again. That gives you another selling opportunity, but just in case it rallies and does so healthily, that's really what we're looking at here. Okay, so here's a bigger area. This is in 2006. And we've double topped. We've come down 11% and we've gone down further. Okay, so maybe this was parallel to where we are. So there's several high volume prints. The volume is really weird over here. I don't know what that's about. Maybe the market's closed on Sundays or something. High volume print right here. And that we're down 6%. I don't know what we're down here currently. Let's look here. We're down. We're down about 9-10% here currently. So being down about 10% puts us there, and we ended up going down. What was it again? I didn't know if I looked at the percentage. 17%. This was a fairly deep correction. We could do something like this. This is fully possible. 17%. That would put us in definite correction territory. So we're down about here, and we see a high volume print here, and we do undercut definitely, but it comes back, and there it comes back again. So we're talking about buying a high volume area. So there's a high volume print. There's another larger high volume print. Down here we have lower volume prints. So even when we get these high volume prints, and we've seen this too just during this short analysis, we get the high volume print, we continue lower, and we bottom on lower volume. We've seen that before. So this is going off of IBD historic information bleh. Corrections happen typically, see if I get this right. They typically happen once every 18 months and can last for up to 9 months. A bear market happens once every 24 months and can last for 18 months or something like that. That's going off of IBD historical information. Okay, so we've talked about this strategy right now for about 40 minutes. Some of you, what do you guys think? Somewhat viable, and then I'll go through another potential version of, this isn't even necessary, well, I guess it is a strategy. I'm sharing a strategy, a potential strategy with you guys. Okay, so here's a deeper correction. If you think we're going into a deeper correction, here's a situation where the market does go lower on you right here. So here's a high volume, we talk about high volume prints. This one, and this one are 3 potential high volume prints. It does continue lower, but even notice here it still goes higher after some time. So right there, so there's your area where you're buying since you have the first high volume print, which is right about there. And notice how these high volume prints, end up, again, this is an index, guys. It's not a singular stock. This is the NASDAQ. This is the culmination of, quite a bit of stocks in time. Eli mentions pyramiding if you do it long term. Yeah, you could definitely pyramid this. You got, okay, and this may lead into my other strategy, which is very similar, buying the leveraged 3 times ETF on a follow through day. Okay, now we haven't talked much about follow through days. During I sell too often for being an investor. Well, the market's warranted it lately. You want to know where I sold, Eli? The last 2 times I sold here before that market sell-off, or probably right there. And then I bought back here, and then I sold back here the other day. That's where I've sold. But no, I'm a trader. I do invest in the TQQQ, but I'm generally a trader. And Eli Lilly bouncing back up here up 1.47%. Already bringing back 0.5%. Pretty cool. NASDAQ put until 1019. Up 220, Alec. You could sell half of it here. I mean, there's no rules against selling half of your position here. Now we're almost up to, on QQQ, we're about 3/4 of average volume. About maybe 2/3, not quite 3/4 of average volume. 30 minutes into the day here, we just printed green right there. You could take half of that position. Yeah. So, and again, guys, this is the NASDAQ. This isn't a single stock. That's the difference here. That is the major difference here. You're not talking about a name that's going to get cut by 60% and stay there for forever. Okay, the NASDAQ, it's going to come back. The NASDAQ comes back. It's an index. This is an index. So let's look at the history of the NASDAQ in a nutshell. Let's go time frame, max, aggregation, month. There's your NASDAQ. We're talking about buying pullbacks here, guys. We're talking about buying these situations. Look at where we have our dots. We haven't even got to 2008 yet. There's our dot right there. Does that look like a bad time to buy? Look at our dot right there. Look at our circle right here. These don't look like bad times to buy at all these high volume prints. Look at high volume on a monthly. We haven't looked at high volumes on a monthly. There's a high volume on a monthly right there during that low. There's a high volume on a monthly. We're talking about buying an asset that you're going to hold for potentially years. I mean, if you bought this low right there, maybe you sell on this correction and rebuy up here. We talk about bottom days over here. Let's keep going with this analysis. Let's put these circles and come back to the monthly and see what we're talking about. This is NASDAQ comes back in theaters. NASDAQ, the sequel. You thought you didn't get it, or you thought there was a lot of tech in the first NASDAQ. Wait for NASDAQ, the sequel. I like it. But you guys get what I'm saying here? I mean, I'm not talking out of my ass here. This is like, in my mind, when I found this, and I have not done this analysis before. I mean, to be honest with you, and I'm really liking this. I'm really, really liking this right now. You don't have to. I don't care. I like it. And I'm not saying that because you have to say you like it now. I really don't care. Okay, so let's go back to, we were in 2006. Okay, so let's do some circles on. I'm interested in uptrends because that's where we are right now. So let's go to a low volume area or a high volume area right there. There's a high volume print right there. We're looking for high volume prints, and the question is this a high volume print? That's the question. Is yesterday the high volume print? That's the question. And again, it doesn't lead to we're going to go higher immediately. That's not what we're saying here. What we're saying here is that we are essentially done with the majority of the downside movement. We are done with the majority of the downside movement. Well, Kevin, this is actually a new strategy to me. I've only put this on in the past year. And I really only started acting on it this year, to be honest with you. So I don't have I don't have a profit-taking target. And guys, I'm buying off of technicals. I'm going to sell off of technicals. I'm going to sell, very similar to what I do with crypto. There's no percentage. This isn't a normal trade, guys. This is it's kind of hard how to, you want to buy a low print, you want to hold for as long as you possibly can. As long as you think the NASDAQ is going to continue its uptrend, you can put this strategy on. The second you think we're going into a 50% correction or a correction, corrective action, you sell. This is a strategy. I mean, I'm probably going to put a webinar on about this strategy. You guys are probably getting that webinar really for free right now. I really like this strategy, and I'm probably going to charge a bunch of people for it. So, no stop loss, Darth. Nope. That's why this is a weird strategy. There's not necessarily a stop loss. Now you can, here's a situation. This is where we ended up before. So let's talk about that. That's great. Risk mitigation. Let's do it. So here's a situation with, for some reason, funky volume. I'm not sure why, but that's not our conversation right now, Kevin. I'm really stuck on this conversation today. So, speaking of which, ladies and gentlemen, tomorrow I'm going camping, so no stream tomorrow, unless I happen to be up and really don't feel like doing anything else. But I got to get ready for going camping today and beginning tomorrow. So here's a situation where, let's say you do arbitrarily take a position here. We talk about this being the high volume print, and this one does undercut quite significantly under. We talk about this is a 17% correction in the NASDAQ. Recently we've had 15 and 12% corrections in the NASDAQ. Maybe you can do, and I don't want to spend too much time on this, but maybe it's a situation where you can come up with an exit strategy for most of these and back test them. I haven't done that. So here's one of those high volume prints, but we're not quite down low enough. Looks like we're continuing lower, no major selling off in relation. So maybe you consider this that high volume sell off right there. Notice you do print lower, and the percentage is about 8%. It's a fairly significant, because if you're in a triple ETF, you're down 24% right now. Okay? You're down 24%. So that's a significant downdraft. Now, if you want to, you could try to arbitrarily take a stop point somewhere, and then, or maybe a failure to rally higher. You can try to exit towards this high or something like that and save yourself some pain here of some of that percentage. But again, even holding through here, it works. Even off of that high volume print. Even if you're off this high volume print, you're not too bad. So, sorry guys. Let's continue. I don't want to harp on that too much. I want to get a lot of content in. That's a very valid question. I'm not trying to breeze over it to sound right or smart. But if you want to go by and putting in a risk mitigation strategy based on what we've gone through here on the NASDAQ, by all means, I'll be all ears. All right, so let's continue here. So we have another situation. That's your initial break and is high volume, and that's like a one and done. You could even initiate that strategy down here on the massive volume. So here's another one, even though it's not technically the same strategy. You probably would have sold on that candle, but then with no downside action, you would have probably bought on that candle right there. All right, how about over here? What do we have over here? So now we're over to 2007. This is the crash. All right, nice, Eli. Yeah, I'm too busy doing this for you guys to look at my own stuff. You're lucky I'm doing this. I mean, really. Who's going to give you the strategy for free? No one. I like the high volume print. I don't even need to explain that one. So there's what could have been a high volume print. That was a supportive candle. But you weren't down a tremendous amount at that particular point. You're only down 4%. This one, you're down about 10%, which is kind of where we're at now. Okay, high volume candle. This is one of those potential for risk mitigation, but you're not really down from the highs that far. That's not a gosh. That's not a big thing. All right, so now we get to 2008. This is different. I was here for this. This was different. I wasn't buying this. No one was buying this. Everybody was selling this. Okay, this was 2008. So even so high, here's a high volume bar right there. We don't undercut much before we go higher, and definitely selling up here would be warranted. If not over here, you would have sold over here for sure. Okay, so that's pretty much most of the NASDAQ, ladies and gentlemen. This high volume print from what I've seen works really well. Okay, here's another high. We don't have this circled. Where's our high volume print here? Okay, hold on a second. Well, I just wish more people would like to hear my preaching. Guys, I'm not perfect. I'm a real guy that trades. I'm flawed. And some people on YouTube don't like that. Here's that low volume print. We have increasing volume the entire time. Here's the high volume print, excuse me. Here's your high volume print right there. So this is where you're looking to buy here. Right there. So at the end of the low volume print in this area. Is that a pretty good area? Let's go back to our monthly chart. Half man, half real. That's right. My wife will tell you the same thing. All right, let's look at our low volume print strategy, guys. Okay, current low volume print on pretty high volume. Previous low volume print. Low volume print. Low volume print there. Low volume print, or high volume print. Why do I keep saying low volume print? High volume print there. And we don't have anything on this downtrend. So far we've been able to catch, if you're waiting for these drops, if you wait for the high volume print, in most cases, the only one that was questionable was this one where we dropped 17% in the market. And that was right here. This was the only questionable one. But even if you held that for a number of months, it still went on to higher highs after 17 months. After a 17% drop. So there you go. That's kind of the gist of that strategy. Right there. Trying to catch these prints. In both of these situations, you would have caught near the bottom. Now, again, we're not trying to get the day that pops up. This is a different strategy. But for me, it looks like it's fairly viable. Really looks like it's a viable strategy. So, yeah, I should put out a webinar today about this for the people that aren't here. So, I may actually delete this video just to say F you to the people that aren't here. But I mean, really, guys, for long-term investing, you're buying an asset that's down a tremendous amount. It is, this is an investing strategy. Talk about buy the pullback. Like I said, even if we get down to here or down to here, guys, I took a partial position. It is a fairly large partial position, but I took a partial position, and I can always buy more. Now let's talk about a follow-through day. Okay, let's go back and let's talk about a follow-through day. So when the market goes into a correction, you're hunting for follow-through days at this point in time. That's what you're doing. Now a follow-through day, we talked a little bit about it yesterday. Let's go over this tomorrow. It's already 7 o'clock. It's already 7 o'clock. So that's enough for one day, guys. That's a lot of information. I mean, yeah, I literally just gave you money. Like, seriously, I just gave you a potential strategy for thousands and thousands of dollars. And Paul missed it all. Like, I think it's an extremely viable strategy. And if all you did in your entire career was this strategy, guys, how successful would you be? How successful would you be if all you did was this strategy? The NASDAQ is never going to fall precipitously unless we go in one of those crazy 50% bear markets, which I don't think we're going to do for a long time. Well, I don't think there's no major economic reason for the markets to fall 50%. Okay, if it is, it's flying under the radar right now and no one knows about it. Yes, there's rising interest rates, but they're still pretty low. I think this is something that I think is great, guys. 40% on Lilly. Sell it. There you go, Eli. Just take 40%, man. You're going to be rich before you know it. Leaving me in the dust. No, Alec. You know what? I'm basically, I'm not done with trading shorting, but I'm done with trading short in the stock market. It's you don't need to. Sometimes shorting, I feel, is a way for you to feel smart. And I'm really, if all you're good at is trading long, let's go back to that monthly NASDAQ chart. Whoops. Come on. Okay. So here's the NASDAQ going back for some time. Only two shorting situations in this market that really will make you money. This one and this one. Those are your only two swing trades. Okay? So, really, in what situation does shorting give you a major profit? It doesn't make you major profitably. It's another skill set. I mean, I could do it. Don't get me wrong. If I wanted to, I really don't want to, though. And this is the thing about back yesterday. Everyone's giving me so much crap about that stupid back thing, and I'm sorry if you're one of them here today. It doesn't need to be in my skill set. I don't need that in my repertoire to be successful as an investor, as a trader. I don't have to know everything. I don't have to know every Elliott wave strategy. I don't have to know how to short. I do know how to short, but I don't necessarily have to. So, knowing one really good strategy will make you a multimillionaire. One. And I just gave you one. So everyone send me $100. Because you're about to make $100,000 off this in the next 10 years. Like, if all you did was that and then sell at those tops, you're going to make, this is a 6-figure strategy, I think. I mean, look at that. If all you did was buy that and hold, this isn't some option that you have to sell at a certain time. Like, if you have this, if you bought any of these prints down here, if you bought that print, if you bought that print, if you bought that print, how are you losing money? How are you losing money? You're not. Now, if you Now, in this situation here where we're down 17% and you bought that early, you're going to be a little deep in the red. It's going to take a while to come back. But then you have 2008. Now, part of this strategy is selling, okay? Now, you don't have to. You could buy that print down here and sell. I mean, if you get 2008, you've got to sell. Bitcoin 20,000, got to sell. 2008, got to sell. 1999, got to sell. You don't have to sell this. This is nothing. This is a pause. Seriously. This is nothing up here. There's nothing major going on up here economically. This was major economically. We knew this in the time. I remember when Lehman Brothers came out. I think it was Saturday. It was like Saturday mid-morning. I'm like, screw you guys. Screw you guys. Coming out on a Saturday, money is going to be effed. But still it was, actually I think Lehman failed over here. But, you know, over here we knew the market was rolling over. There was a follow-through day within here that got negated pretty quickly. And you were selling up here anyways. You know this is going to happen before it happens. And it probably won't happen again. Technically, this shouldn't happen again in our lifetime, to be honest with you. I mean, well, depending how old you are. I won't say lifetime. This shouldn't happen for a long time. You know, you usually don't get these big downdrafts. This is not normal, guys. This is not normal. This is more normal for the market. So, anyway, but part of this strategy is selling. This isn't something like I said earlier in the broadcast. What the heck is that about? This is getting out of control. There we go. So this is more normalized right here. A 50% drop is not normal. Usually 20, maybe a 30% drop in a really crappy day or market is normalized. You know, like you're going to get those bear markets, like I said, once every few years. You're going to get corrections once every year and a half to 2 years. So part of the strategy is selling at the top. You guys do have to know how to do that. Okay? You do have to know how to sell. But even if you bought it and forget it, I'm not mad at that. You want to know what this can do for you guys? Seriously, this is what this does for you. This is the TQQQ on an aggregated on an all-time chart right there. Now it only started trading in 2010. So we don't have, you know, history going all the way back. This is an ETF. I hope this never goes out of business because it's a huge money maker. But, you know, let's say you bought this this breakout right there. That's 900% from 2013 in 5 years. That's 900%. That's 1,000%. Okay? That's 1,000% right there. In 5 years for a retirement fund. Seriously, I'm giving you money. I'm just handing you money right now. Handing it to you. This is that 2015 low. What if you bought that low right there? And didn't sell any of these pops? 367%. What if you sold that pop a couple days ago? 465%. And now you reload down here. Reload for that pop. Reload for that pop. Reload for that pop. What if you do that? What if you do that? No one says you can't do that. You guys are individual traders. Yeah. What if you bought Bitcoin for $100? Exactly. No idea what that means, but I'm going with it. I like it. So, anyway, that's that strategy, guys. I like it. I like it. I like it as a strategy overall. Now, let's go to the current market situation. Is it too early to buy this? From a, you know, like from a day count perspective. So how many days did this drop to the bottom? 1, 2, 3, 4 days for some crazy high volume prints. 5, 6, 7 to the ultimate high volume print right there. 7 days to the ultimate low volume print. 1, 2, 3, 4, 5 days here. Maybe we'll get a higher volume print as we go lower here. We'll see. We sold off over here. 1, 2, 3, 4, 5, 6, 7, 8. 8 days to that low volume print right there. And like I said, we're on day 5 right now. Let's check out Lulu. What candle? Looks like a normal crappy day. Oh, this one? What about it? It's not nothing that crazy. So anyway, I'm not calling for this as the bottom. You guys know that by now if you're still here. I'm not calling for this as the bottom. I'm calling for this as an area to get involved on a low print. Nothing less. Well, market's, fairly positive today. Well, so far it looks like it's going to go back into the red, but yeah, the market's fairly positive today. So, based on what we just talked about with that whole TQQQ strategy, you could just sit here and hawk the chart and then buy, after you see these high volume candles, buy when you see a low print that you like or something, or just average in or something like that as we can, if and when and as we continue lower. Because the sell-off doesn't have to be done right now, but it is a super high volume candle that we've had. And it's a situation where, we may print lower, but how much lower? We talk about this print all the way down here. We talk about this print. We talk about this right there. So it's just one of those situations where how do you want to handle it? Everyone's going to handle their count a little bit differently. All right, let's get to real market action here, guys. I think I'm done with that. Guys. So if you're here and you haven't joined me in the past, please hit that subscribe button. Get the alerts of when we go live streaming. Pretty much every day that the stock market is open, we will do a live stream in the morning, unless I'm sick or something like that. All right, so here's the one Eli I was looking at. Looking pretty good, poking its head up higher there. Restoration Hardware coming off of a low print, filling that major gap that it had. GDS, that's one we haven't really looked at much in the past. GRFS. ARMN is one that we mentioned a high tight flag here after it had that huge pop, and high tight flagged and broke out quite nicely. Looks like consolidating that breakout. Looks like still very healthy. Twilio, plug not doing much. Save is an airline. Looks okay. Yeah, also like the video, guys. Also like the video. Boot, BCC, CRISPR, in a selling off after a gap higher this morning. Huya, Artec gapping down a few days ago here. Potential interesting bottom, maybe low risk situation, but I don't know, man. I'm not buying gaps like that in the stock market. Hertz, never got going. MGA, new. FL, Glog, Solar Fund, Illumina, Dorm, BECN, Momo, NXPI, NOAA, C-Trip. A lot of these things going lower. Damn, these things keep following me around. NXPI is dropping as I'm clicking, so I've clicked on it 4 times. PKG. Oh my goodness, Eli, did you see PKG, dude? Look at that thing. Wow. Talk about failing a chart pattern. That's 16% on PKG. I don't think, man, when's the last time I ever had a sell-off like that? I don't think ever. Man. This may not bode well for the market. Maybe our low volume print strategy has more downside to it. Let's go to weekly. Look at that. PKG never had a day like that or a week like that. That's tremendous in PKG. We were trading PKG like a mofo during this run over here. Node Investor and I. Holy Jesus. That's got to be way too far down. Talk about buying a low print. Look at that. Maybe there's another low print right there on PKG. Talk about buying low prints. Man. Hold on, I got a text Node. I'll give him some time to wake up. I don't know if he's up or not. That's crazy. Now, this is a singular stock that I probably wouldn't be putting that strategy together there, but, you know, when you get these big major market moves like this, man, it's a crazy move. All right, Q's already rolling over, so let's see how this works out. Maybe our high volume day gets more high volume today. So guys, 719. Let's go look at this real quick on the shorter term time frame. Wow, look at that volume, guys. So let's look at these past 2 days. Yesterday was the big break, and we noted the volume yesterday. Even more elevated volume in the sell-off later in the afternoon. And then today we have a bit of a nice green print right here. And now we're pulling back on lower volume. And already getting bought up here, guys. So that low volume print yesterday may have washed us out. You never quite know. Like I said, don't know if it's the bottom, but it's definitely a thing. Whoops, why did I do that? I'll send that later. It's crazy. All right. And that's it, guys. I'm gonna get out of here. I hope you guys liked that. I think I'm probably gonna make that into a webinar and put it on my Real Crypto channel. How to buy pullbacks on the Nasdaq. I think that's a great way to do it. And you know, this requires patience. You have to set your trading mind aside, and understand that you're buying an asset that is going to give you exceptional returns, that is traditionally much less risky than most stocks. Okay, that's the general gist of it. And you're not buying the low print. You're not buying the breakout. What you're doing is you're buying a situation where the market historically should not go much lower. Now, much lower. Notice I say much lower. Doesn't mean it can't go lower, but, you know, is what it is, guys. All right, I'm going to get out of here, get ready for camping and stuff. Yeah. Paul, if you have any questions about that later, feel free to private message me in Slack. Use the @RealCrypto if you want to talk about that or watch it again. So I know you missed a lot of that. It's going to be hard for me to retell that exactly in a very short period of time. So hit me up, buddy. All right, guys, thanks for joining me today. I'll see you on Monday.